All right, really quick check on Bitcoin. So you guys saw my big long back there, my amazing short here, this long here. Obviously, if that long stayed open, it would be up 15%. But I closed it prematurely, tried to do some scalping with some shorts, and I was wrong on those shorts. Obviously, I took a tiny loss with my risk management skills. My losses don't matter, and this is really a great illustration why my trading strategy is so successful. Yes, I do lose sometimes. I am wrong sometimes, but it's by design. If I really wanted to have a 100% strike rate, maybe not 100%, but I could have an extremely high strike rate because I get into those riskier trades where I do feel like there's a 50% or more chance I get stopped out for a small loss by design. I get into these big trades, right, that go on huge runs, massive gains, surgical entries, because I can do that. But I also exit those trades sometimes, and I scalp a little bit, and I do those riskier trades where I can win or lose, and I do that because when I do lose, I have tiny little losses. And when I do win, these are all 5, 10, 15% breakout runs, and when I'm trading with 10x leverage, we're talking about incredible gains, right? So when I like to, I joke around and brag, obviously, I'm not always right. I know that. I'm just joking around. I'm wrong all the time, but it's by design, and it's part of my strategy that I'm okay with being wrong sometimes. It's totally fine. So I closed this last surgical entry here, great long. I closed that and finally went short. I'm now killing it on this short. I'm already up 3.8%, 3.9%, which is essentially 38% because I have 10x leverage on it. But I want to talk to you really quickly and update you what I think is going to go on. So we're correcting now. I think this is going to continue. I thought originally we would hold right here at 67.60 support. I think we're going to get down and test this trend line right here. If that trend line breaks, we're going to keep pushing down to essentially the last main support area around 6,500. I'm thinking if we were to correct over the next several hours for the rest of the day, get down to around 6,500, that would be great. Now, theoretically, it is possible we could also correct all the way down to that main trend line, right, that forms the ascending triangle. I'll show you again in a second on the other chart where you can see it much more cleanly defined. In theory, we could actually correct all the way back down here over the next 24 hours, right? We can come back down to the low 6,000 range, and that would be incredible because if that happens, I think we launch into a huge run for $2,000 or $3,000 potentially, and I'll show you why. We actually have the short-term scenario. You could see how this configuration is, right, where we got up, we moved sideways for a bit, made another bullish push up. Now, if you look at how the volume was working around then, and if you look at what happened with the stochastic and the other oscillators around the same time, there are several similarities with what happened this time around, where we ran up, we paused for a little while, got that second push up, and then we got the hard dump. Now, in both cases, the stochastic on the daily were in a very similar configuration. On the daily, Stoke, we're talking about, what, it was the 22nd, and today. So right now, we're actually getting pretty high and starting to see a reversal in momentum based on the stochastic. Now, we had a relatively similar situation going on over here around March 20th when we had that similar configuration on the way up and then the dump. So it is possible we could actually get a larger dump, upwards of, what, 10%? We could do one of those over the next 24 hours, but I'm not necessarily married to that. It's just one possibility I'm looking at. Now, if I were to go to the other chart, you can see there's a pretty clearly defined ascending triangle here, and that's extremely bullish. You can see it even better on the 4-hour chart. Let me switch back over. Checking out the 4-hour chart, this is a really bullish configuration. We have Ichima dynamic resistance right here from the 222. We wicked up past it because the bulls are really strong, but we came back down. I'm not going to consider that wick to invalidate this ascending triangle. It's still quite a valuable configuration to use to model. Now, if you were to ignore some of these wicks and focus on where most of that trading volume was, where the candles all opened and closed, you'll see there's a very strong and very well-defined ascending triangle, and we're right back to within it. So if we were to come back down and retest the bottom, that could be the one final retest before a launch where we bust through. However, if on this current correction we manage to not close out this in the next hour and 15 minutes, I'm already moving my stop loss down on my short, locking in a lot of profit. So if we were to make a push up and close this 4-hour candle above that resistance at the top of this ascending triangle, I'm going to be like 80% sure we're going to break out from there. And if we get and close above where this candle went, that big run, if we were to close all the way up at 7,200 or close to it, above that 222 Ichima dynamic resistance, then we're probably breaking out of this ascending triangle into a run. So we're going to have to watch and see what happens here. The short I'm in right now is more of a short-term short. I don't think that's going to take us all the way back to 5,000 or anything. This trend line is going to be way too strong, and this ascending triangle is an extremely bullish configuration that I plan on utilizing for an eventual bullish call. That's going to be more of a longer-term trade as opposed to a short-term swing that I've been doing, or a short-term day trade that I've been doing. So let's watch and see what happens here. I'm very curious to see how this 4-hour candle plays out. There's another hour and change left on it. I already have profits locked in on the short, so I'm going to walk away with not only gains on that run-up call, but on the way down. And we'll see. If we close above the resistance here, that's going to be a potentially strong sign that we might be turning bullish. And if we get above the 222 EMA, that'll be even stronger. I think I'm going to leave this up in the air as far as where exactly that resistance is. I do really prefer to have it down here because there was so much volume that was holding us right around that level. That's essentially where the main resistance is, but it's a little bit of a range. When the wicks go up a little further like that, you get a little bit more of a range. Now, looking at this, if you're a purist and you say, nope, as soon as a wick comes up, it invalidates an ascending triangle, I think you're just wrong, and that's not the way to do this. I don't think that's right at all. I think anytime you can have one guy with one big order, that would invalidate some really beneficial formations. But let's just assume for a second you're one of those people. If that is the case, then this would have to be considered a rising wedge, which is a very bearish configuration. So if this is a bearish indicator, either way you're with me on the short, right? It's just a question of what happens after that. So since this is bearish, we could theoretically break out and dump down. I just don't think this is it. That said, we've all been waiting for one more big dump, so there are a couple different scenarios we should consider. Either this is a rising wedge, it's bearish, we're going to come back down, test the trend line support here, and if that fails, that's going to confirm the bearish scenario, and we're going to dump all the way down to the low 5,000s into the 4,000s, and then eventually we'll get that final bounce and push up into the big bull run that we're going to get with the halving. If we break up and close above the top of this ascending triangle and even the top of the 222 EMA, that's going to be a really bullish indicator that I think we're probably going to go all the way up to somewhere between 78 and even, well, we could theoretically get up to about 8,500 because that was a main resistance right here. You could see the strong support we had back then. There's also some support and resistance right here in this range from 7,800 all the way up to 8K. So anywhere from 7,800 to 8,500, it's a pretty broad range, but that could be a target of a breakout move here. So I'm going to have more information for you later. I'll be able to share my thoughts once we get more information and this 4-hour candle closes and we get another couple hourly candles under our belt. We'll be able to get a better idea of what's going to happen, but for now, that's what I'm paying attention to. I'm watching this candle because it's very important. I want to see what happens with the Ichima dynamic resistance with the 222 EMA. I want to see if we close back below this trend line, because if we or this this resistance atop that ascending triangle, because if that's the case, there's probably a really good chance that I can leave my short open and ride it all the way back down to some of those lower supports. Again, it may only get down to what I was showing you in here, where we had those key supports, where we had this shorter term trend line right there. That could be a potential target on the way down. There's also the cloud right there. So in theory, if it were to come right here to 64.50 or 63.50 or so, that could be a perfect spot to launch into another move up. Not only would it confirm that this trend line support is holding as a main support, but the top of the cloud is there, and that Ichima dynamic support is a very, very prominent support that I use when I'm trying to time big reversals and big bounce plays. Same thing with the EMAs, but since the EMAs are all grouped together, which is normally very bullish, if one of them fails, chances are the rest of them will fail too. And then again, if that were to all fail and that trend line were to fail, we could come all the way back down to some of the lower support. So we should pay attention to all that and consider all those potential configurations. And again, if we do break up and close above that resistance at the top, then we're going to probably go right into a bullish scenario. I'm thinking we're probably going to stay bearish and let this correction last a little longer. First of all, you can see how overbought we are on the oscillators. The oscillators are key to my strategies. Take a look at the 4 hours. Stochastic's totally maxed out. Last time the stochastic was maxed out, we got a little bit of a final push, and then we had a nice correction of 5%. And check this out. Stoch was maxed out and overbought there. We got a big dump. Stoch was maxed out over here. We got a nice little dump. Now, it wasn't as big as some of the other ones. Like, this one was obviously much bigger. But when the oscillators are maxed out and they're overbought like that, it's a really good chance you're going to get a deeper correction. And that's why I said today, I think we might even get a bigger correction than I was expecting tomorrow, when I was actually, or yesterday rather, when I was wrong and I got stopped out of those trades. We might even get a deeper correction than that. And then lastly, if you take a look on the hourly, you'll see we're still maxed out, right? Overbought on the Stoke, and even the lower time frames are. The 15-minute goes back and forth. Now, since the 15 minutes bottomed out, just like it was here, I would expect a little bit of a short-term bounce, so it could come back up here, maybe test the resistance at 6,900 before pushing down again. That's why I'm going to lock in my profit and place my stop loss above that 6,900 support resistance, because if my stop loss is above that and we get a little bounce here, I don't think we're going to get back above that 6,900 resistance. We'll probably get close to it, maybe hit it, and then come down to finish out this correction. I don't think this correction is over with. Again, not until the rest of these oscillators come back down. RSI, stochastic, both have to come down on the hourly and the 4-hour before we can push up and do another move up. The only way I'll ignore those oscillators indicating such a bearish bias is if we were to push up right now and close above 7,200, above that 222 EMA on the 4-hour. If we were to push up and do that in the next hour, I would say, okay, we're probably just going to go into a bull run right now. But I don't think that's going to happen. So, a couple things up in the air. I'm at 100% on one of those outcomes right now. But just to reiterate, I think we're going to continue to correct for a little bit. And I think once we do that, then we're going to have the real possibility of launching into a really, really solid run up. The only way we're not going to get that big run up is if those key supports fail, like the bottom of the ascending triangle trendline support. If that fails, we're going all the way back down, and we're going to get that final deep correction we've been waiting for before we get into that halving bull run. Hopefully that clears things up and explains my thinking. I'm going to share this with everybody, not just the group. I feel like it'd be nice just to give everybody a little insight into what I'm thinking. I do enough that's dedicated exclusively for the group, obviously, so hopefully, Flux Trading Crew, you guys won't mind that I'm sharing it publicly. I'll be around in the group all day, so if you have any questions or if you need me, hit me up, let me know, and maybe we'll do a dedicated live stream just with the premium group later, so you guys can pick my brain and we can share some other potential scenarios as we get more information today. All right, talk to you in a bit. Thanks.